Because you've always, when you're looking at oil, got to look at who's producing the most, which is the Saudis. The Saudis have, of course, opposed to Iran because of the Sunni Shia situation. The differences there, and those subtle differences really do determine the movement and therefore the supply of oil, which already is being cut back to try and move the prices higher.
Yeah, there's so many issues at play here. I mean, certainly OPEC are sitting there with a huge amount of spare capacity at their disposal. So ultimately, if we did see, a level of disruption as a result of these escalating tensions, then Saudi and some of the other major Middle East producers could certainly step in and provide some buffer to the market. But yeah, when you look back, I suppose, at all the supporting actors within this issue, they're all continuing to push, this cautiousness, trying to obviously deter any further escalation. So I think from my perspective, and certainly that the market's one, it does appear to be something that still can be rather contained within the Israel-Hamas region at the moment. But tensions are certainly rising, and it does have the ability to cause quite a level of disruption within the oil market and broader energy.
Yeah, I was going to ask you also about this because Iran itself, though it has significant reserves of oil, is not necessarily a significant producer into the established world, the Western world, because of sanctions against much of its production. So this is where the supply-demand situation is not really genuinely affected at this stage.
Yeah, correct. I mean, they've been under sanctions from the US for quite a few years since Trump did lift them. And so, the amount of oil seeping into the market at the moment is relatively small, certainly compared to what it was in the past. But they are essentially, surrounding, I suppose, one of the largest straits of water that trades oil, and certainly the prospect of them starting to disrupt those flows through the Strait of Hamas are quite high. In fact, the Iran Revolutionary Guard did, present a veiled threat last week when it said that it could choose to disrupt trade through there, but has held back from that for the moment. So clearly, the initial impact on Iran would be small, and certainly OPEC could contain it. But it's, I suppose, the prospect of that broadening to the Strait of Hamas, which presents, significantly lift in potential oil being disrupted.
So, Daniel, there is the fundamental problem, even potentially for Australia, not just with energy prices, but if supply chains are disrupted, it's potentially wheat shipments or live sheep shipments that could be coming from Australia. It could be, goods coming from Europe coming the other way that have to be diverted, as they have been in recent times. So these are all the risks, the geopolitical risks that start to mount.
Absolutely, and we've already seen that over the past couple of years with the Russia-Ukraine war. This would just add to the complexity, I suppose, of the global commodity trade. And certainly it raises the prospect once again of, relatively high energy prices. I mean, we've seen gas, for example, come off over the past couple of months, but certainly the prospect of drone attacks on energy infrastructure there is raising the cost. And that additional time that shippers are taking to get both raw products and consumer products around the globe is rising as well. So the prospect of inflation coming back is a real issue.
I'll tell you what, Daniel Hynes, Senior Commodities Analyst at the ANZ Bank. Many thanks for your time.
My pleasure.